Ray Dalio spilled 95% of all investors will miss this 10 times investment. Ray Dalio, one of the most successful hedge fund managers of 2020, has decided to set up a Chinese fund through a local subsidiary at a time when Chinese stocks are being hammered due to an ongoing government crackdown in the Asian country. A report in the Securities Times suggests that the investor is looking to raise nearly $468 million for the purpose. His latest move comes as no surprise since over half of the assets he manages are for non-U.S. clients. Welcome back to Investor Secrets. Today we're going to talk all about how Ray Dalio invests and why you should follow. So watch this video till the end because today's video is going to be the bomb. Now let's get to our topic. Question 1. How to invest. There are 3 potential market situations that could ever happen. Market going up, market going sideways, market going down. It's easy to make money when the market's going up, but 95% of people don't make money, or even lose money, when the market is going sideways or down. And we can't beat the market, nor predict the future. That's what makes investing hard. The question is, how to invest so that we can have unlimited upside profit potential during the upward market trend and protected downside risk protection during a market downturn or adjustment. Question 2. How to choose. Another problem with investing is that there's simply too much information everywhere. News, advertisements, blogs, newsletters, social media. We're exposed to investment advice all day long, and everyone claims that they have tips and strategies to beat the market and pick the right stocks. One expert asks you to put all your money in technology stocks, another says 50% stocks, 50% bonds, yet another says 40% stocks, 40% bonds, 20% commodities. There are like millions of ways you can invest in the market and 100,000 investment products and funds available for your choosing. With technology, we can have access to these products fairly easily through an online trading platform with minimal fees. The question is, how to choose the right investment products and tools for us. How Ray Dalio answers the questions. Ray Dalio, billionaire reputational founder of Bridgewater and sophisticated investor, worked with his colleagues to create the best asset allocation mix for preserving wealth over generations. They want to make money in all different market conditions, up, sideways, or down. There are hundreds of people in his team, and they study the history, stock market pattern, and how one change would have any implication on another. It was a huge undertaking, and it costs money. The minimum investment amount with Ray Dalio was reported to be $500,000 to $1 million. After many assumptions, hypotheses, and testing, he developed the golden asset allocation, known as risk parity investing. Risk parity investing. Risk parity investing involves ensuring a mix of assets that are positioned to do well in all economic environments. Along with his clients' and other investors' monies, Ray Dalio invested his own savings and monies in the products that fit the risk parity algorithm. In a few years, the fund had over $3 billion, and the risk parity investing method was developed to be one of Ray Dalio's major investment principles. The perfect asset allocation algorithm. Here's the breakdown of the risk parity investment method. 30% invested in a fund that tracks the biggest company stocks, 15% invested in mid-term bond of 7 to 10 years, 40% invested in long-term bond of 20 to 25 years, 7.5% on gold, 7.5% on other commodities. Whether this works? Tony Robbins, in his book Money Master the Game, tested Ray Dalio's method of investing tracing back to 30 years, i.e. 1983 to 2013. And found that following his allocation, out of 30 years there would only be 4 years of losing, and the maximum loss is 3.9%. For the rest of the years, this portfolio with Ray Dalio's asset allocation algorithm would have achieved 10% compounded annual return. Not bad, huh? If you have no idea how to invest your money or how you should allocate your investment, the algorithm could be something for you to consider. Dalio was recently interviewed by news publication The New York Times ahead of the launch of his new book titled The Changing World Order, that tackles complex subjects like inflation, the US-China rivalry, and the rise of cryptocurrencies. In the interview, Dalio delves into the business history of successful empires like America, China, and the Europeans through history, drawing parallels and providing insight for the present-day investor from them. Dalio has a personal net worth of $20 billion, and his hedge fund had a portfolio value of $18 billion at the end of the third quarter of 2021. Some of the top stocks in the portfolio of Bridgewater Associates at the end of September included Apple Inc., Tesla Inc., and Meta Platforms Inc., among others discussed in detail below. Our methodology. These were picked from the investment portfolio of Bridgewater Associates at the end of the third quarter of 2021. The stocks in which the fund increased stake by 400% or more compared to filings for the second quarter were preferred. The hedge fund sentiment around each stock was calculated using the data of 873 hedge funds tracked by Insider Monkey. Ray Dalio is doubling down on these stocks. Floor & Decker Holdings, Inc. Number of hedge fund holders, 28. Percentage increase in stake during Q3, 459%. Floor & Decker Holdings, Inc. is a specialty retailer of hard surface flooring. The company recently posted earnings for the third quarter, reporting earnings per share of 60 cents, beating estimates by 3 cents. The revenue over the period was $876 million, up 28% year-on-year. Latest data shows that Bridgewater Associates owned 50,324 shares of Floor & Decker Holdings, Inc. at the end of the third quarter of 2021, worth $6 million, representing 0.03% of the portfolio. At the end of the second quarter of 2021, 28 hedge funds in the database of Insider Monkey held stakes worth $1.16 billion in Floor & Decker Holdings, Inc., down from 38 the preceding quarter, worth $1.11 billion. Just like Apple Inc., Tesla Inc., and Meta Platforms Inc., Floor & Decker Holdings Inc. is one of the stocks that hedge funds are buying. General Mills Inc. Number of hedge fund holders, 37. Percentage increase in stake during Q3, 535%. General Mills Inc. markets branded consumer foods. According to regulatory filings, Bridgewater Associates owned 271,421 shares in the company at the end of September 2021, worth $16.2 million. Citi analyst Wendy Nicholson recently upgraded General Mills Inc. stock to buy from neutral and raised the price target to $70 from $63, noting that the firm offered a good story in a tough sector and that it was trading at very cheap prices. Among the hedge funds being tracked by Insider Monkey, New York-based firm Renaissance Technologies is a leading shareholder in General Mills Inc., with 3.7 million shares worth more than $226 million. MasterCard Incorporated. Number of hedge fund holders, 156. Percentage increase in stake during Q3, 888%. The hedge fund of billionaire Ray Dalio owned over 6,372 shares of MasterCard Incorporated at the end of the third quarter of 2021, worth more than $2.2 million, representing a very small portion of the total portfolio of the fund. Among the hedge funds being tracked by Insider Monkey, Virginia-based investment firm Acre Capital Management is a leading shareholder in MasterCard Incorporated, with 5.8 million shares worth more than $2.1 billion. That's all for today. If you guys enjoyed this video or think it was valuable, then don't forget to hit the thumbs up, subscribe to our channel, and hit the bell icon to get notified first. Also, feel free to let us know your thoughts about the next video in the comment section down below. See you soon. Bye.